and welcome to this week's QuickBooks Enterprise Deep Dive. My name is Kristen Tucker, and I'm a senior consultant here at Fourlane. Today, we are tackling something that I get asked about almost every week, and that is how to go back and correct accounting mistakes in QuickBooks Enterprise without corrupting the data file. So if you've ever spotted an error from a few months back and you froze because you were afraid that touching it would break something, then this session is definitely for you. So over the next half hour, I'm going to walk you through the 6 corrections that trip people up the most, and I'm going to show you the safest way to make each correction and point out exactly where the landmines are. We'll keep time at the end for questions, so jot them down as we go. Let's dive in. So here is our roadmap for today. We're going to start with a mindset shift because that one idea prevents most of the damage that people are afraid of. And then we're going to work through the specific fixes, the everyday void versus delete question, editing periods you've already closed or reconciled, cleaning up payments and undeposited funds, and then finally items, reconciliations, and journal entries. Now, on every fix, I'm going to flag the safety step that keeps your file healthy. And a quick note on the format, I'm going to drop in some short demo clips as we go. So you're going to see the exact click and path on the screen, and then we're going to come back and talk through them. All right, with that being said, before we touch a single transaction, I want to reframe how you think about corrections. So when someone tells me my QuickBooks corrupted my data, what usually has happened is that a correction went in the wrong way, somewhere, somehow. The software is rarely the villain, and it's usually the way we go in to fix things. So here is the headline for today, and that is fixes don't corrupt your data, bad fixes do. So there's 3 patterns that cause most of the often self-inflicted damage. So first, deleting a transaction instead of voiding it, which is going to erase the history and it can shift balances and periods that you've already closed. Secondly, editing a transaction inside of a reconciled or closed period. Now that is going to throw off balances in your accountant or your accounting software, right? It's going to throw off the balances that you've already signed off on or that your accountant has already signed off on. And then third, forcing a number into place with a journal entry instead of using the right form, right? So think forcing your inventory valuation to, match your balance sheet or whatever it might be. Okay. Now, the good news is that there are 4 simple habits that make almost any correction safe. And those habits are, firstly, back up your file before you make any changes. That way, you always have a clean copy to roll back to. Second, you want to set a closing date password so the past can't be edited by accident. Okay. The third habit here is work in single user mode when you're making structural changes. And we're going to talk about what that means later. And then fourth, you're going to run verify data when something feels off. This way you catch issues early on, right? So keep those 4 things in your back pocket because you're going to see me come back to those on pretty much every fix we go through today. Okay. Now that's going to bring us here to fix 1 of 6, the age-old void versus delete debacle, right? And recovering what's gone. Okay. So you might ask yourself, when do I void versus when do I delete? Okay. These things are going to feel similar, but they're going to behave very differently. So when you delete a transaction, you're going to remove it entirely from the system, right? The amount disappears, the balances shift in every period that the transaction has touched. And it also breaks links between transactions that are applicable, right? So think an invoice and a payment, right? Or bills and bill payments. And that's going to leave stray credits floating around if it's relevant to the transaction that's being deleted, okay? Now here's the dangerous part. Once it's deleted, it's gone from your reports. The only place that it would still exist is the audit trail at that point. Okay. Now, for that reason, voiding is the safe default. A void is going to keep the transaction and its date, but it sets the amount to 0. Okay. So your check or your invoice number, it's going to stay in sequence, right? The paper trail is intact and it's completely visible to your accountant, so they can see exactly what happened and when. It's also reversible and transparent, which is everything when you want to correct something. Okay. So we're going to take a look at that in practice. Okay. So here we have 2 checks. Okay. We're going to void one of these checks and then we're going to delete another one. And we're going to look at the differences in our reports when we do that. Okay. Now, whether we delete or void the check, right, it's going to have the same effect on the bank register in the sense of the dollar amount is going to change to 0 either way. Okay. So I have check 1466 and then I have check 1467 that we added today. Okay. So as we can see, I'm going to look and see these two on the audit trail, 1466 and 1467. Okay, so for this first one, I'm going to delete it, okay? Now for 1467, I'm going to void this check, okay? So you'll notice the difference right away. When I click void, right, I'm coming here to the arrow underneath the delete button, and I clicked void. It is changing the value to 0, like I said, right? Not just taking the whole thing out, okay? The memo is going to have a note that it was voided. That auto-populates, and I'm going to save. Now, you'll see that when you void something, it offers to add a journal entry to keep the books in balance, depending on if this check was in a prior period or not, okay? In this case, I'm going to say no, just void the check, okay? And you'll see that the status changes to cleared because the check amount is 0. Now, when I go look at the audit trail, okay, you're going to see the differences in what happens, okay? Check 1467, you can see here is where it was added. Here is where, well, that's where it was saved, right? Here is where it was voided and the amount changed to 0, okay? The check that was deleted, as you can see here, here's where it was added and saved. I changed the date on this, so that's why you see that here. And then here is where it was deleted, okay? So you're going to see a difference there. Now, if you look at the check detail, this did initially have 2 checks here, right? But now, remember how we said, if you delete a check, it's going to disappear from your reports other than the audit trail. Okay, so before I deleted, there were 2 checks here, okay? Now only the voided check remains, and you can see the amount is 0, okay? So that's going to be your main difference, right? It's hard to check to see, what was there if you delete it. A lot of that depends on user permissions, what you're allowed to see, what reports you're allowed to run. So it makes things a lot harder to trace when you delete something versus voiding it. So we want to void where at all possible. Now, coming back to our safety check for fix number 1, and that is back up your file before you delete anything, right? Which we shouldn't be deleting anyway. We're going to void them, okay? So before you void, definitely before you delete, there might be instances where you really do need to delete something, okay? But always make a backup of your file before you do any type of correction, okay? And never delete anything in a closed period. Fix number 2. So, editing closed and reconciled periods safely, okay? Now, this is where a lot of accidental damage happens. Here's why it breaks. When you edit a transaction that's already been reconciled, you're changing the beginning balances. of your next reconciliation. And you change numbers that your accountant may have already signed off on for taxes or review. Now, suddenly your reconciliation won't tie out, and then you're chasing a discrepancy that you inadvertently created. Okay. Now, the safe fix is to leave the original transaction alone. Instead, you want to make your correction with a dated entry in the current open period, or if the change genuinely really has to go back in the prior period, right? You want to get an explicit sign off from whoever owns your close before you reopen anything. Okay. And some of your cases, that person might be you, right? In other people's cases, it might be their CPA, their accountant, whoever is owning the close. Okay. Now, the safeguard here that prevents accidents is a closing date password. A lot of people skip this step. Okay. And that's where accidents happen. Okay. Now, I'm going to show you where the closing date password is. We're going to walk through setting that up. Okay. All right. In order to set a closing date password, we are going to come here to the edit menu and we're going to select preferences. We're going to select the accounting tab here on the left. And then we're going to go into company preferences. Okay. And down here in the closing date section, you have the option to set a date or password, a closing date or password. Now you'll notice when this dialog box opens, you have the option to exclude estimates, sales orders, and purchase orders from closing date restrictions. Okay, the reason you have that option is because those are non-posting transactions. They don't really affect any reports other than open sales orders, right? Or open estimates, right? So you have the option to exclude those. There are a lot of times where changing those will actually be a thing that is necessary, okay? So whether or not you choose to exclude these 3 non-posting transactions from your closing date password, that is going to vary from company to company. But underneath that is where you set your closing date password. Okay, so I have this set to 6/1/2026. Okay, and then I've set a closing date password here. Okay, now once you set this, if you are putting a password here, it is not going to let anyone post or change any transactions that are dated prior to the closing date. Okay, so I'm going to show you what that looks like. If I go in and I try to write a check and I'm dating it 5/1/2026, okay, I'm going to put a transaction in here and I try to save this, this is the warning that I get. Okay, this modification is going to affect transactions from closed periods and also affects previous financial reports. Okay, so it's going to ask me to enter the closing date password. If I am someone who does not have the closing date password, then no dice. Okay, so this is how you're going to protect your closed periods, but it's also how you're going to remind yourself. Okay, when this pops up, that's your reminder. Oh no, I'm posting something in a closed period. Should I actually do this? Okay, right? And the safety habit that relates to this fix, right, is if a fix forces you behind the closing date, that's your cue to stop and confirm with whoever owns the close. Okay, the person owning the close, again, it might be yourself or it could be someone else, but this is your hint to confirm before making the change. Now, here we are at our third fix. Now, this is one that we see a lot, okay? It creates a lot of confusion, and that is misapplied payments and a messy undeposited funds account, okay? Now, the symptoms look like this. You've got invoices showing as open that you know for a fact were actually paid, or your undeposited funds balance just keeps growing and growing and it never ties out to your bank account, okay? So for a misapplied payment, the fix is pretty simple. And importantly, you do not delete anything, okay? Now, you open the customer payment in this case, you uncheck the invoice that it was wrongly applied to, and then you select the correct invoice, okay? You do that, you save, and done. Okay. Deleting and re-entering the payment is what creates the stray credits and the broken links and the duplicate payments and all the things that we just talked about. Okay. And we're going to go over that in a second, show you how it works. Now, for money that's stuck in undeposited funds, the correct tool is the make deposits tool. Okay, so this is a workflow issue that causes people a lot of time, right? A lot of time sink spent into fixing this later on. Okay, and it can be solved with a simple workflow fix. Okay, and it's just a matter of using the right tools that the system has in place. Okay, so the make deposits window is how you move payments that you've received into your actual bank account so that it matches your real deposit. What you should never do is create a journal entry to clear out undeposited funds because that just hides the problem and then it breaks your bank reconciliation. Okay. Now I'm going to go over a demo of this. We're going to go through it and see how it looks, but I want to go over the safety habit for this. And that is before you edit any payment that's already cleared the bank. Okay. You want to check the reconciliation status so that you don't reopen a reconciliation by accident or you don't mistakenly change the beginning balance to a reconciliation. Okay. So that's the safety habit here. So now we're going to jump into looking at what that looks like, and I'll show you what the differences are. Okay, so here we are with an example of a misapplied payment. Okay, so here we have some sample data. We have a situation where a payment was applied to the incorrect invoice. Now, the payment in question is this $2,400 payment here. Okay, we can see the payment. Now, the payment was meant to be applied to invoice 143, but we know that it wasn't, right? Because the open balance, I see here my open balance column, it tells me that 143 still has an open balance of 2,400, which was also the original amount. However, invoice 144 has an open balance of $300 and not 2,700. Okay, so I'm going to open this payment and I'm going to show you how we would apply this to the correct invoice, right? How we're going to make the correction. So I'm going to open my payment. And as you can see, there's all of the open invoices under this job name, okay? And sure enough, this $2,400 payment was applied to invoice 144. We see the check mark here, okay? So the simple thing to do here, and you'll notice is, there's an underpayment of $300, right? Because this was a $2,700 invoice, okay? 2,400 was applied. All we need to do to correct this mistake is to uncheck this invoice, okay? All of that disappears down here, and we're going to put a check mark by the correct invoice. Now notice when I'm unselecting an invoice here, the amount received up top never changes, okay? Because we received $2,400. That's all the system needs to know, okay? Now, if I were to try to save this without selecting an invoice, it would just put it as a credit memo, okay? Or an unapplied payment is what it would be. All you need to do is open the payment here and select the correct invoice. I'm going to select 143. You'll see now the payment is, it's applied to the right invoice here. We'll see amount due for that invoice, amount applied, no discounts and credits, okay? I'm going to save and close, okay? Now, when we look at 143, we'll see that the balance is $0. Okay, so we've applied that. And then the invoice 144, the balance is now 2,700, the open balance, that's what it should be. And now the payment is correctly applied to the correct invoice. Now this brings us into the second piece that we want to look at, okay, and that's the undeposited funds. When we are receiving these payments, okay, If you have your undeposited funds settings turned on, which we'll look at those in a second, you're not going to see a box here to select where this payment is going to go because the system is automatically putting it in undeposited funds. Okay. Now, undeposited funds, all right, if we go to our preferences, we go to payments, okay, and then company settings, okay, we're going to make sure that use undeposited funds as a default deposit to account is selected. Okay. And in our case, it already was selected. So when the system has this blue link that says, where does this payment go? The undeposited funds account is where it went. Okay. Now, if we take a look at our chart of accounts, we look at our undeposited funds account here, you'll see that we have a little over $19,000 in here. Okay. The correct way to move funds from the undeposited funds account into your actual checking account is to use the Make Deposits feature, which is found here under the banking menu, Make Deposits. Okay. Now, once you open the Make Deposits window, you're going to see payments to deposit. If you have any payments that are sitting in undeposited funds and have not yet been deposited using this function, this payments to deposit window is going to pop up when you open the file or open this window. All right, here is the payment that we just made, $2,400. Okay, there it is. So I'm going to deposit this to my checking account. Now, the reason for this, let's say that you deposited 4 checks at one time and your deposits those checks as one lump sum. Okay, you would want to select all 4 of these, all 4 of whatever payments are being deposited, right? What this does is ensures that when you go to reconcile at month end, your bank register matches your bank account exactly. So you're not going to, go try to reconcile 4 different checks to one lump sum on your statement. You want to be able to reconcile one to one, okay? One deposit to one deposit on the statement. So in this case, $19,000 would be what shows up on the bank statement, and I would be able to cleanly reconcile to that here. All right, so I'm going to deposit to my checking account, save and close. Now you'll notice when I did that, the balance in my undeposited funds account has decreased by $19,000 and we only have $110 left. Okay, now that is the correct way to use the Make Deposits feature. Number 4. Now this is a quiet one that can cause big surprises. An item that's mapped to the wrong account. Okay, now here is the ripple effect you want to understand. In QuickBooks, items carry their account mapping into every transaction that uses them. So if you change the account on an existing item, QuickBooks can repost every historical transaction that used the item. You don't necessarily always want that to happen, but it can, right? And it happens quietly, okay? It moves numbers and periods that you've already closed if you allow it to, okay? So the safe fix here, especially if history matters, is usually you don't want to edit the existing item. Now, there are exceptions to every rule, but in general, you don't want to edit the existing item. Instead, you want to make the old item inactive and create a new corrected item so that going forward, the transactions will post to the correct accounts, okay? And if a prior period does need fixing, then you post a single dated adjusting entry for that period, okay? That way you're correcting on purpose and in one place instead of silently rewriting history of the file, okay? Now, if you do decide that you need to edit the item directly, and there are situations where this would be the right move, okay? So if you've got open item receipts, you've got open purchase orders, sales orders that use the old item, and you really need to follow through with that same item on the subsequent accounts, then in that case, you would want to edit the existing item, okay? Now, when you do that, you want to edit the item carefully because when you change the account mapping on an existing item, you're going to get a dialog box that pops up when you try to save the item. You'll want to stop and read that prompt carefully, and you're going to want to understand exactly what it says before you make any other moves, okay? Okay, here I have an inventory part, okay? We've got it mapped to a COGS account, an income account, and an asset account, okay? Now I am going to maybe change the income account here. Maybe I don't want this going to miscellaneous materials. Maybe I want this going to sprinklers and drip systems. Okay, so I'm going to change the mapping and I'm going to click OK. Now this is the dialog box that we're talking about, okay? So you want to read this carefully and make your decisions carefully, okay? So it's going to tell me that I've changed an account associated with this item. All future transactions with this item will use the new account. It's going to ask me, would I like to also update existing transactions? Okay. There will be times where the answer to that is yes. That is going to be something that is decided amongst yourselves, your CPA, your accountant, whoever is owning the books. Okay. So if you do want this change to reflect upon all prior transactions throughout the history of the file, only then would you select yes to updating the existing transactions, okay? 9 times out of 10, the answer is no. Okay, so if I select no, I would not like to update existing transactions. That means that this change is only going to apply to any transactions that use this item after I save in the current moment. Okay, so I'm going to select no. Okay, the change will only affect things that are going forward. Okay, safety fix here is to back up your file before you make any changes. Okay, something like this is definitely something that is most likely to move prior period numbers. Once you make that decision and you say yes, you can't undo it without going back and trying to guess where things went, what the numbers were, and the things. Okay, so make a backup before you remap any accounts to any items. Okay, now that brings us to fix number 5, chasing down a reconciliation discrepancy without redoing the entire month's reconciliation. Okay, when your reconciliation suddenly doesn't balance, you don't want to have to start over. Start by finding out what changed and why. Now, there are 2 reports that do this for you in QuickBooks, 2 native reports. Okay, one is called the Reconciliation Discrepancy Report, and there's also the Previous Reconciliation Report. Okay, we're going to go over where those are, where to find them, and how to use them. Okay, these reports show you transactions that were cleared in a past reconciliation, but they have since changed. And that's almost always the cause, isn't it? A transaction that was already cleared got edited, deleted, voided, whatever it is, after they had already been reconciled. Okay, the amount changed, the date changed, whatever it is, and now your beginning balance for your reconciliation is off. Okay, now the targeted fix to this is to find that one transaction, change it back to what it was, and then simply resume your reconciliation. Okay, very rarely do you need to undo the whole thing, but when you genuinely do need to start over, then you would use the undo last reconciliation feature, and we'll show you that too. Okay, you don't want to sit there and manually uncheck hundreds of transactions. It's slow and it's error prone. Okay, so we're going to go over what that looks like and how to fix it. Okay, so here we are in our file. And the first thing we're going to do is take a look at the two reports that we identified earlier. So if we come to the reports menu and go to the banking section, we're going to take a look at reconciliation discrepancy. We're going to focus on the checking account. Okay, we've got a discrepancy there. We're also going to open our previous reconciliation. And I'm going to select the detail report. There's a summary report. I could pull both, but for this case, I'm going to select detail. And in this report, I want to include transactions cleared plus any changes made to those transactions since the reconciliation. So I'm going to select the second option. Okay. Now, what this reconciliation detail report shows is exactly what was cleared at the time. So you'll see here at the beginning, you have your cleared checks and payments. There's 138 of those. Okay. And then you have your cleared deposits and credits, 20 of those. And then you have the total cleared transactions here. Okay. Cleared balance, all the things. Okay. I'm going to minimize this. Now, this reconciliation discrepancy report does show us that we do have something that was changed after it had already been reconciled. In this case, it was a check. Okay, here's the check date. Here is the vendor, the check number, the amount that was reconciled, and the type of change. Okay, so the change was that it was deleted. And then the effect of the change is that the register balance was increased by $3,000. That check is now missing. Okay. Now we don't want to have to undo an entire bank reconciliation if we don't have to. Okay. So one thing I want to look at is I'm going to come here to the reconcile screen and I'm going to take note of what this beginning balance is. Okay. And then I'm also going to take note so I know I need to go back in and I need to replace this transaction. Okay. So I'm going to go back to my write checks window and I'm going to replace this to be exactly what this was. Okay. So it was check 1464. And the date was 12/15/26. Okay. And the amount was $3,000. Okay. Now I'm going to search for this again and you'll see it's right here. Okay. So what I want to do, I'm going to make this bigger so you can see it. Here's the check that I just replaced. Here's the reconciliation column, and you'll see everything around it was reconciled. This has not yet been reconciled, okay, because we added it back after the reconciliation was already done, okay? Now you'll see some changes that are happening as we put that transaction back. Our reconciliation detail has now updated to show new transactions for 12/15, right? Okay, our reconciliation discrepancy report has not yet updated because we have not corrected the reconciliation portion. Okay, so what we need to do, which is something you don't often do, but in this case, we are going to reconcile this in the register, okay? Only because we know it had already been reconciled and then subsequently deleted, okay? Now you're going to get this warning, and it's basically telling you you don't want to clear things in the register. In this case, we do want to because it is a correction. Okay, so I'm going to select yes. You'll see the check mark. I'm going to click record. Okay, I'm going to ignore that. Okay, now when I come back, okay, I'm going to take a look at this. Okay, now our beginning balance is not 116 anymore. It's 119,56306. Okay, so our beginning balance is corrected to where we want it to be. And now we can go ahead and continue on with the next reconciliation. All right, now our last fix really is about judgment. Okay, when should you reach for a journal entry and when should you absolutely not? Okay, journal entries are the right tool for specific things, right? For a specific set of jobs. You could use them to reclass between accounts, for example, moving an expense that landed in the wrong account. You could use them for depreciation. You want to use them for depreciation, right? Accruals, period end adjusting entries that your accountant gives you, things like that. Okay. And you should use them when you want to correct prior period balances when your accountant directs it. Okay. But journal entries are the wrong tool for a lot of things, and they are a real source of corruption style problems in 3 specific cases. Okay. Case number 1, you never want to use a journal entry to fix an accounts receivable or an accounts payable balance. Okay. In those cases, you want to use the actual relevant forms. So an invoice, a bill, a payment, a credit memo, whatever it's going to be, right? You want to use the correct form. Okay. Journal entries to accounts receivables and accounts payables, they don't carry customer and vendor detail correctly. Now, it is possible for you to select a name on the name field on a line on a journal entry, but it doesn't carry over detail properly, right? It doesn't have item detail, doesn't have any of that. Okay. Now, secondly, you never want to use a journal entry to adjust inventory quantity or value unless your inventory is kept in a third-party system outside of QuickBooks, okay? If you have your inventory modules turned on inside of QuickBooks and QuickBooks is your active inventory, point of record, you never want to use a journal entry to adjust inventory. And I say inventory quantity and value, but you can't adjust inventory quantity with a journal entry, only value, because you cannot select an item on a journal entry form, okay? In those instances, you want to use the adjust quantity value on hand, and that is what is going to keep your counts and costs in sync, okay? That's another way to knock the balance sheet value off from the inventory valuation summary. When you start using journal entries to adjust inventory value, your balance sheet is never going to match your inventory value reports. Okay. The third thing you never want to use a journal entry for is for sales tax liability. Okay. You want to use the sales tax module that is in the system so that your sales tax reports stay accurate. Okay. Now, the safety habit for this is, and this is an easy rule to remember, if a journal entry is going to touch receivables, payables, or inventory, it's a red flag. Okay. You want to stop and use the correct form instead. Okay. So let's pull all of this together now. All right. Underneath all 6 fixes are a handful of habits that keep your file healthy. So you're going to back up your file before every correction, and you're going to keep a dated copy that you can roll back to. Okay. That single habit alone turns almost any mistake into a non-event. Okay. The next thing you want to do is run a verify data regularly to catch issues early. Okay. So you're going to verify your data. We're going to go over how to do that. All right. You want to catch those issues early, but you only want to run the rebuild data when you actually find a problem. Okay. When the verify finds a problem. And you only run that on a file that you just made a backup of, just in case something goes wrong. Okay, remember you always want to set and maintain a closing date password so that your history stays put. Okay, now I want to talk about two myths that I feel are worth busting. And the first myth is, condensing your file. Okay, condensing your file rarely fixes any corruption. A lot of people think that it does. Okay, what it actually does is hide the problems that cause the corruption by removing the detail. So you're going to treat a condense as a last resort and not a routine maintenance. Okay. The second thing is the 5-second rule I live by. So if a fix is fighting you, if it feels like you're having to force it, then you want to stop. Okay. That's your signal to reach for the right form or grab a second set of eyes. Okay. Because that's really the whole message today, isn't it? 6 fixes, 1 habit, correct on purpose, never in a panic. Okay. Now, if you want to go deeper into any of these, the rest of the Enterprise Deep Dive series covers things like reconciliations, journal entries, and then month end in much more detail. And they're all on our YouTube playlist. So now is the time that you can ask your questions. All right. Thanks so much for spending this time with me today. The recording and the full deep dive playlist is going to be available afterwards, so you can revisit any of these fixes step by step.